Breaking news now, and we have Aramco's third quarter profit just hitting the wires here. What we've seen here is a 40% increase year on year on Q3 net income to $42.4 billion. The company also announcing that free cash flow has increased to a record $45 billion. So this is a significant beat on expectations, actually. The market was looking for $41.7 billion in the quarter. It crossed at $42.4. In terms of what else the company is saying here, well, it's also, of course, sticking to this big dividend, a Q2 number of $18.8 billion to be paid in the quarter. The Q3 dividend of $18.8 billion will be paid in the fourth quarter as well. Indeed, in terms of commentary from the company as well, we have the CEO, Amin Nasser, saying against the backdrop of global underinvestment in our sector, something that we've been talking about, it says we're extending our long-term oil and gas production capabilities while also working towards our previously stated ambition to achieve net zero scope 1 and 2 greenhouse gas emissions from our wholly owned and operated assets. So, of course, Aramco currently pumps around 12 million barrels of oil per day. It's been investing pretty heavily to increase that capacity to 13 million barrels per day, really betting that demand for its oil and products is going to grow into the next decade, even as we see a complex and messy pivot away from fossil fuels around the world.
And remember, of course, Aramco is the Saudi state. So this is a country that even yesterday was saying we're going to have a continued surplus. We've already seen them in a surplus. They have a continued surplus on the agenda, and they are planning to spend big, because we've got to remember this is all against the backdrop of the Saudi Vision 2030, and there's a lot still to do. And I'm sure that Mohammed bin Salman, the Crown Prince of Saudi Arabia, has a lot of use for that money.
Exactly. So what we've seen here is higher oil prices certainly being a windfall for Aramco, but also higher oil being a windfall for the Saudi government, which has been running this budget surplus, as you say, and also big windfall for the Public Investment Fund too, which is tasked with investing into that economy and transforming that society.
And externally as well. And what's going to also be very interesting, I mean, this was the argument that you and I have been having with various folks we've been interviewing over the last several days, myself in particular, which is that if the Americans want to have a seat in this conversation, it might behoove them to work on their own production, to work on their own oil situation, because of the fact that you can't sit on the sidelines. If you don't play, you don't stand to gain anything, if you will. So the U.S. is a swing producer. They're not using that card. They're not playing that card. So right now, who's in control of this situation? Saudi Arabia.
And it's interesting to also see the headlines around this relationship between the United States and Saudi Arabia evolving. What happens next with that, we don't really know. And even Dan Yergin on the program earlier saying it all comes down to what OPEC is going to do in December. Will economic conditions warrant another cut to production? And if so, if OPEC decides to make that technical move on the market, of course, there will be significant political implications.
Oh, the political implications just days away from the midterm elections, at a time when the U.S. envoy for energy, or special coordinator for energy, as he's now called, Amos Hochstein, was just telling me yesterday that essentially this is an issue that has crossed now party lines, and that there is broad support, not only for a tougher stance perhaps on Saudi Arabia specifically, but also in terms of big oil. He said those profits that were released on Friday, those numbers did not make anyone happy.